Hello to all traders and welcome back to another market review brought to you by Orbex. The big news from the early Asian session is that the Bank of Japan have lifted its interest rate, its benchmark interest rate by 0.25% or 25 basis points. Even though stocks have been flying, we're seeing the currency taking a bit of a downward spiral after, as you can see on the screen now, against the dollar. It's moving roughly around 100 pips higher, and more significantly, it's the highest it's been in 30 years. So quite a, quite a big milestone for the Bank of Japan as it hopes to tackle inflation as well as all the other countries and big economies around the world. So as you can see here, if we just actually go on the daily chart, it might be a little bit more productive because as you can see from this massive bullish candle here, we've got no wicks on it yet. We're just hitting a bottom and a top here of, as I said, moving over just over 100 pips in a short amount of time. But that was always the case if the Bank of Japan was going to start tampering again with its benchmark interest rates. So where do we go from here? Well, naturally, we're just looking at 157 at this last top. If it's going to have heavy rejection there, only about 20-30 pips to go, so not too much in the way of a big move because we've already had the massive move so far. The only thing we can say is if the RSI does get a little bit more into the overbought area, then we could see a nice bearish divergence which could pull prices a bit lower, but it just depends if prices are going to start moving that little more higher or lower as we see more and more of a bounce in price action as well. So lots to think about with the yen because it was actually quite a steady currency to trade on. We were moving slightly lower, obviously with the base currency being the dollar here. Anything downwards was going to be a bit more of a plus for the yen. But as you can see here, we've pretty much eclipsed those losses and now we're moving back into positive territory for the dollar at least. So lots to think about as we head into the last couple of weeks of the year. Where can we go from here? Will there be any more big news events? Because obviously next week a lot of the markets are closing and the week after that actually. So we won't get too much, possibly too much volatility or big fundamental news events going into the last couple of weeks. So this week was the big one. We had inflation, we had interest rate decision all over the world pretty much. The Bank of England, now Japan. So we'll wait and see what comes out of that. Let's just take a quick look on the euro dollar as well, because since we had the news of the Fed cutting, we had this predominant spike towards 118, which was possibly the highest we've seen for quite a few months going back to September. But since then, as you can see, it's fallen away. The dollar is regaining some strength here. So we could see more of a downside risk for a few buyers in the market. Intraday wise, we're just seeing now, as you can see, it's a little bit more tantalizing, you could say, because there are some good opportunities here if we do break even lower from the, as I said, from the early Asian and Australian session. We are breaking that much lower at the moment, so it could be even we have more room to go further down. The only thing is the RSI and other MACDs and stochastics are falling into the oversold zone, moving away from negative territory. So this could be a big sign that prices could find some support in the next few hours. But obviously when the European session and the American session does open, we'll get more and more of a big look into the market as well. So NFP numbers failed to lift any spirits this week. You know, inflation data and interest rates decision. It's really been quite a big host of news events. So let's see what next week brings, if there's going to be anything to shout about, and we'll see next time around what's going to go on for the next few trading days ahead. So thank you very much for joining me, and we'll speak again next time around. Bye for now.